I think Bitcoin probably corrects into the mid 70s and probably ends the year in the mid 180s. And you say, well, how the hell is that going to happen? Because that's just what Bitcoin does. It'll clean out all the renters. And there are people out there right now, BlackRock and Fidelity, that are talking to their clients about strategically owning Bitcoin. You mentioned the UAE, they own several hundred million of Bitcoin. You mentioned the state of Wisconsin, several hundred million Bitcoin now. Incrementally, people are buying Bitcoin. As they incrementally buy the Bitcoin, it'll be very, very positive for Bitcoin's price activity.
Scaramucci acknowledges Bitcoin's volatility, but views it as a natural phase in the asset's adoption cycle. He notes that Bitcoin's price surged to $108,000 before correcting, emphasizing that such fluctuations are part of its growth trajectory. He predicts that Bitcoin may correct to the mid-$70,000 range before rebounding to end the year around $180,000. Institutional adoption plays a crucial role in this outlook, with major entities like BlackRock, Fidelity, and sovereign wealth funds increasingly accumulating Bitcoin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
What I would say is that doesn't really understand the nature of that asset. And so what that asset is a secure, decentralized, fully distributed, very transparent spreadsheet. It's a very transparent system to move value between people. And by the way, people have to know this, their bank is a spreadsheet. Okay, your money's on the spreadsheet in one account, my money's on the spreadsheet in the other account. If you're the car dealer, the money in my account goes down, the money in your account goes up. What are those things? They're just digits in the bank. We've decided that we're going to trust this instrument, this US dollar, to a form of technology to transfer value between each other. And why do we do it? We have all these different reasons why we do it. Okay, but what if you could create a trustless system? What if you could create a system where you don't have to rely on the government, but there's a network, and so a result of which there's hundreds of thousands of people, so you don't have to trust any one person, and the system is truly transferable, unhackable, it is completely secure, and then it ticks off all the elements that we've used to have money in our society. Immutability, scarcity, trust in the technology. And when you look at it from that perspective, okay, it has value. The network itself has value. And if you look at it from that perspective, is it any different from gold? Gold is a bar of gold. Yeah, it's metallic. Some people will argue it has some manufacturing value. It has value for jewelry. Is that 5 or 10% of the value of gold? No, gold is valuable because we all perceive it to be valuable. We trust that other people will perceive this to be valuable, and so that we'll be able to use this to have value between each other. I think Bitcoin was at 68, 69,000 when Trump got into office. It shot up to 108,000. That was probably an overshoot. If you told me Bitcoin was at 69,000 and it was 78,000 4 months into Trump's term with all these pro-Bitcoiners in Washington, I said, well, that's a really nice, handsome move. But the fact it went to 108 on its way to 78, no bueno. And I think people have to get psychologically comfortable that could Bitcoin correct into the mid-70s from where we are right now? I believe that. Yeah, it's possible. Could it go lower than that? I think if it goes lower than that, it's a huge buying opportunity. And I think I would try to figure out ways to buy more. Although I'm loaded to the gills with Bitcoin, I would try to figure out a way to buy more. But I think Bitcoin probably corrects into the mid 70s and probably ends the year in the mid 180s. And you say, well, how the hell is that going to happen? Because that's just what Bitcoin does. It'll clean out all the renters. And there are people out there right now at BlackRock and Fidelity that are talking to their clients about strategically owning Bitcoin. You mentioned the UAE, they own several hundred million of Bitcoin. You mentioned the state of Wisconsin, several hundred million Bitcoin now. Incrementally, people are buying Bitcoin. As they incrementally buy the Bitcoin, it'll be very, very positive for Bitcoin's price activity. And that's not to say that there won't be price movements like this. There's things going on that we've just experienced. The biggest hack, $1.5 billion was hacked at a Bybit by the North Koreans. Terrible hack. They're going to survive it, thank God. And they've got a lot of friends in the industry that have helped them and backed them up. But that causes a crisis of confidence when things like that happen. And so go back to prior hacks, look at Bitcoin price activity, and you'll see that what I'm saying is more or less true. So I think we bottom in the mid 70s, but we close the year in the mid 180s. Stablecoin legislation and why that's so good for Bitcoin and why that will feed the Bitcoin ecosystem. I think we'll have more definition about what that's going to be, and I can help people think about it from an analytical perspective. I think that if we're going towards a strategic Bitcoin reserve by that time, and I'm not saying we will because it's not enough time, but let's say that we are, I think we can talk about the implications of that. And I also think that that would be a big setup for, it'd be a race. There'd be an arms race. There'd be a Bitcoin arms race. You're not going to let the United States own the Bitcoin network. You're not going to let Michael Saylor and the United States own the Bitcoin network. You're going to be in there and you're going to buy a piece of that network and want to be a part of it. And so we'll have to see what happens. But, you could be in a situation, let's talk positively for a moment. You could be in a situation where, God willing, we'll have a war ended. God willing, we'll have some resolution of what's going on in Gaza. And all of a sudden you're in a situation where risk premiums come down in the market because there's less global macroeconomic uncertainty. I think that would also be very good for Bitcoin, But, Bitcoin's a cycle. Bitcoin goes through a cycle. Anybody that's buying Bitcoin that thinks it's just an asymmetric bet short term is wrong. I think if they step back, they can realize that it is an asymmetric bet longer term, because I do think it gets adopted and trades to the valuation at or near, possibly better than gold, but it's not going to happen overnight.
Scaramucci explores potential geopolitical scenarios that could impact Bitcoin's trajectory. He speculates that resolutions to global conflicts, such as those in Ukraine and Gaza, could reduce risk premiums in financial markets, positively influencing Bitcoin's price. Furthermore, he suggests that a global Bitcoin arms race could emerge as nations recognize the strategic importance of holding Bitcoin. Similar to gold reserves, Bitcoin is not a short-term trade, but a long-term asymmetric bet. He likens Bitcoin's adoption cycle to the early days of the Internet, where growth and volatility were interlinked. Drawing parallels to companies like Amazon, Microsoft, and Apple, he asserts that Bitcoin will experience cycles of volatility, but will ultimately appreciate in value as adoption increases.
When you do the homework, Stan Druckenmiller, Ray Dalio, Paul Tudor Jones, Michael Novogratz, Pete Grieger, Michael Saylor, you pick the person. Neil Ferguson, who wrote the legendary book, The Ascent of Money, is a historian about money and about what we use money for in our society. If you do the homework and you look at it, all of a sudden you're like, okay, that is money. Okay, and then will it be adopted by the society? As Satoshi said, will it catch on? You may want to buy some, it may catch on. And then you have this younger generation of people that understand the digital world, and then it starts to catch on, and now you're looking at adoption rates. And so where are we? If it's Web 1, we're like in the year 2000. Imagine the growth between 2000 and 2025. And then let's be a Michael Saylor be mad at me. Let's be the Bitcoin is gold theorist. Michael says it's digital property. Michael says it's an operating system. It's a new software for money and the cycles of money and the transactions of money. It's a cheaper, easier, and it's immutable. The government can't corrupt it by adding to it. And so therefore it becomes even more valuable. But let's just say that it's gold. Okay, let's say that it's a form of digital gold. And by the way, it's easier to store and it's easier to move around than gold, is it not?
Absolutely. I mean,
okay,
you don't need
so now all of a sudden it may be better than gold, but let's say it's just gold. Okay, and so as it's adapting, it's going to go through volatility curves. Amazon did that. Microsoft did that. Apple Computer did that. Pick the companies. And so this is now being adopted and married up against the people like me and Saylor and the guys that like it. There is a chant out there of people that don't like it. It could be Warren Buffett. It could be the woman that runs Goldman Sachs' asset management investment research. It could be a whole host of people, and they're going to chant against it. And so that creates this uncertainty. It creates the cycle. And if you look at it from that point of view, there's an adoption curve, and that adoption curve should come with high volatility. But if we're right, the volatility will be volatility upward. It won't be volatility. It won't trade to zero. If you look at Bitcoin and you take a cursory look, and I've got a lot of books here on Bitcoin, you don't understand it. You probably think it's financial blather. You probably think it's a code on the internet that how could that be worth anything? It's not backed by anything. And if you read, there's a woman at Goldman Sachs that writes about it all the time. She's a Bitcoin denier. She hates Bitcoin and she says it's worth absolutely nothing and it's backed by absolutely nothing. And so therefore, it'll go to zero. It'll eventually trade to zero. And then there's guys like Cliff Asness. He wrote a parable. He said Bitcoin got to 250 and then exploded. And there's still some people that like it. It's trading at 10,000 and this is the year 2030. You know, why am I bringing that up? Because there's a healthy skepticism about Bitcoin in the marketplace, and people that don't really study Bitcoin, they have that feeling about Bitcoin. Now, maybe they're going to be right. I don't know. We'll have to see 10 years from now, 5 years from now. I'm been humbled by life, Alan, and I've been humbled by markets, so I'm not going to talk to you definitively about this. I'm just going to give my analysis and tell you that I put my money where my mouth is. And so
he references renowned investors and financial historians such as Stan Druckenmiller, Ray Dalio, Paul Tudor Jones, and Neil Ferguson, who have recognized Bitcoin's potential. According to Scaramucci, those who dismiss Bitcoin often lack a deep understanding of its fundamentals. Similar to early skepticism surrounding the internet, Scaramucci acknowledges the persistent divide between Bitcoin proponents and skeptics. While figures like Michael Saylor and institutional investors champion Bitcoin's potential as digital property, traditionalists like Warren Buffett and analysts at Goldman Sachs remain critical. This ideological battle contributes to Bitcoin's volatility, but also underscores its disruptive nature. Please like and subscribe.